Newsline with Faraz Shaukat Ali on TV1.
A very good evening to you and a warm welcome to Newsline Zoom. My guest today is Professor Aminda Perera, who's from the Wamba University in the Kurunagala district, which of course in Kulia. Good evening to you, Professor, and welcome to Newsline.
Yeah, good evening, Faraz. Good evening.
Thank you. The question for tonight's program is, can we sustain a contracting economy? Is this a folly or is it sustainable, a contracting economy?
Well, I would say it's a very debatable topic. And what I personally believe for us now, like why the government wanted to limit the economic transactions because of the inflation. So basically, like when it comes to the inflation, we have to accept that we had a very high inflation. And theoretically, when it comes to inflation, there can be two types. One is that demand pull and the cost pull. Now, here for me, the Sri Lankan inflation is mainly because of the cost. So if it is cost, by just limiting the economy, I don't think that we can go for a good decision or overcome the issue. Because now we can experience that since we have limited all these economic transactions, we have seen like last couple of weeks and a couple of months, so many companies or the businesses, they collapsed. So we have to be very vigilant. We have to be very careful when it comes to long-term economic decision. In the short term, yes, we can do something, but we have to look at the repercussions of those in long term. Therefore, I don't agree with the contraction. What I believe is, we have to run the economy.
I see. So, but because at the moment we have rising interest rates are high. It doesn't matter that they've started coming down. The problem is that it's still high. Then we have import restrictions of various sorts. And so on the other side, we have the IMF who say that we need to increase revenue. It would help if they collected all the taxes that were due. But, apart from that, how can the corporates perform when there is a regime of high interest rates, import restrictions? So everything this government seems to be doing is they're trying to maintain a recession. And then how can you deliver what the IMF says? So it looks like right from the word go, we won't be able to to meet the expectations of the IMF.
Yeah, first we have to understand that we experience open market economy. So when it comes to the open market economy, the government intervention should be minimized. And there are different occasions where the government should get involved and control. But in this case, we have not still correctly understand the real issue of the economy. That is my personal feeling. So what went wrong in Sri Lankan economy? Because for me, there are two reasons. One is that, when you look at from the independence onward, yes, we had some issues. At the same time, 2019, with this tax cut, again, we created another unexpected issue in the country. So then if you have correctly analyzed these economic issues, we could have find a better solution than just finding solution on day-to-day basis. Now, finally, what we have done, so we 100% depended on IMF, and what IMF says, we have taken 100% as it is. No, as an economist, what we believe, the government should have, at least to appoint a good team and analyze the real situation, and for that, they could have find a solution, rather just taking what IMF directed us. So we have to, as I told you, when it comes to economic solution, we have to consider the short term, middle term, and the long term. There are, of course, we need to look at the short term, but more precisely, we have to look at the long term. Now, if you make anything wrong in the short term, that can impact on the long term to the Sri Lankan economy. So, for example, the fertilizer issue. just, I mean, since we didn't have dollars, we stopped importing fertilizer. Now see that, what has happened to us. So like that, we have to run the economy. Again, I would say we have to run the economy. We have to facilitate the business community to run. For that, keeping interest low and, providing them better facilities and infrastructure, and think of new tax systems and all are very important. But what I have seen, the government is just intent to increase the government revenue somehow. Therefore, they increase the taxes, they put everything on the business people, rather correctly analyze and finding a sustainable solution.
Now, a lot of people, and I'd like to put to bed this myth. I call it a myth, but let me tell you what that myth is. A lot of people say, look, the banks are doing very well. The banks are making a lot of money and that sort of thing. But the fact is that they're not, are they, really?
Yes.
Because if you consider the capital employed by the banks, it's vast. And so I'm struggling here to look for to get you the interbank comparison thing here. So banks, their return on equity after tax ranges from about 14, 12%, 12.5%, 9%, 11%, 5%, 4.8%. Those are the development banks. 8.9%, 17%, and 10.6%. So somebody's made 17%, But when you take into account inflation, then all these figures that I've just mentioned mean absolutely nothing. But in my absolute money terms, it's a lot of money. But what do you say to that? How can you explain it to the section of the public who seem to think that the banks are doing all right? Thank you very much.
Yeah. Now, we just look at the absolute numbers, not the comparative numbers. So we have, the last few months or the few years rather. So the bank were charging high interest on the loans. So it went up around, say, sometimes the 30%, whereas they have given only 3 to 5% for the normal deposits, other than the fixed deposits.
Yeah.
So we compared the loan services cost and the amount that they charge from the government, especially this pressure from the treasury bonds. Yeah. And when you look at the gap, yes, there were considerable amount in terms of rupees. But as you correctly mentioned, so we have to look at the real terms. Now, these are the cash terms. Okay? So when it comes to the cash term, yes, we can say that, they earn billions of profit. But if you want to convert them to the real figures, so we have to divide that by the inflation. And when you look at the inflation, that went up even over 70. And the international figures indicated that we crossed even the 100 and we touched the 132% in March, in between the March and the May. So in that case, whatever that you earn, if you can't exceed the inflation rate, everything finally, there will be an impact in negative terms. Therefore, even though we say that the banks earn profit, if you convert them into the real term, of course, they lost their, we say the wealth, not the profit. So in terms of the wealth here, not only the bank, almost all, including ourselves, we deposited our money in banks, earning just say 10 to 15%, and finally our prices went up over 70%. So they ended up with minus numbers now.
What about looking? What about looking at the return on assets before tax? What about, is that a good yardstick?
Well, yes. Normally, when you measure their performance, we look for two aspects. One is that return on asset and the return on equity. In both cases, as you said, that is not adequate. Even I would say that rather confining that to a bank, only the banking sector, I would say the entire business community, they face the same issue.
Because if you look at the banking, at the banks, and my figures here tell me that the return on assets, if you look at it that way, it's most of them are not even 1%, 0.7, 0.7, 1%, 0.75, 1.2, 0.5, 0.3. One person's got 1.1%, and somebody else has got 2%, 2.4. So it's very low, isn't it?
Yeah, exactly. It's low.
When you look at it.
And even if you look at the first quarter, this 2023, when you look at the figures,
Yeah.
so we saw that the most of the banks, like especially the small banks, so they ended up with considerable losses, not even the profit.
So what is the alternative, Professor? What should the government of the day be doing?
Yeah, the case is now like the most of the banks, they went for a high rate fixed deposits and they collected money. And now on the other side, the entire industry collapsed. Like they are not going for the bank loan. Even the general public, they can't go for a bank loan because the rates are very high. So if the banks, like they stuck, right? Because the banks earn profit in terms of taking money from the people and giving money back to the industry or the people. So if the economy is running well, again the banks can earn profit. So what the government should do now, let the economy to run smoothly and facilitate it. So that is what we are expecting.
But what would happen if they took out en masse the import restrictions? Then obviously there'll be a mad scramble for dollars, and then the rates will go even higher.
Yeah. So like as I told you, that's now we have to look at two aspects of this issue. One is that we don't have rupees. On the other hand, we don't have dollars. So we have to address both cases.
May I interrupt you? Let's come back to this after this short break. We're now going for a short commercial break, and we'll see you on the other side. We're in conversation with Professor Aminda Perera from the Wamba University. We'll see you on the other side of the break.
News First, Newsline with Faraz Shaukat Ali on TV1.
President calls for a report on the NMRA within 2 weeks. Body of the missing Danish tourist who attempted to summit the Alagalla mountain found. Farmers in Polonnaruwa frustrated over conduct of politicians. Chintana Geethal grabs another medal at the Commonwealth Games.
When a heart attack strikes, every minute makes the difference between life and death. With the right care and treatment at the hand of the most skilled surgeons and medical professionals. With the perfect environment for recovery. Darden's Heart Center, dedicated to you.
News First, Newsline with Faraz Shaukat Ali on TV1.
And welcome back to Newsline Zoom. I'm in conversation with Professor Aminda Perera from the Wamba University in Kuliapitia. Professor, welcome back. What were you saying before the break then?
Yeah, well, we were talking about this import restrictions. Now, what I highlighted for us there, now when it comes to the economic issue in the country, so there are two aspects. One is that we don't have rupees, so that is what we call the budget deficit. And the other hand, we don't have dollars. So since we don't have dollars, we stop all these imports. So what has happened, like when it comes to the imports, we are charging a huge tax. We have to understand. So we get a big amount of money from taxes. Now, if you take vehicles only, we know that how much the government is charging. Sometimes they go for over 400%. Now, when you stop importing vehicles, that impacted on the rupee income as well. So we have to look at both aspects. Now, the government says, they don't have rupee even. So there should be a proper balance. I don't think like just opening the entire economy at once and, let the people to bring down everything from other countries is not correct. But in one day, we have to open the economy because especially when it comes to the intermediate goods. So the industries are stuck because we don't have machineries now. we don't have fertilizer, we don't have chemicals. So, we have to look at both aspects. Therefore, there should be very rational decision rather just, controlling imports or controlling export, anything, something like that. There should be more rational and economic decision.
Professor, do you see when we observe that the interest rates are coming down and the inflation, the rate of inflation is also now remarkably down, much lower than it was. Do you see this process getting better, or is it going to come to a point where we say, well, this is the best we can do unless we go the other route, which is to grow the economy?
I would say that this moment is not the correct time to answer it because everything depends on the way that we handle our external debt restructuring process. Now, up to now, we are dealing with the foreign other dealers, and we try to get our foreign debt restructured and the local as well. So, if we can overcome that problem by say September, so therein after we can expect a better economy. So if you fail in any case, so then we'll be turning to other way around. So at this moment, I believe that, when you compare with the last year, yes, we are on the better field or the better ground rather. So if we can continue with, yes, we can overcome this issue. But everything depends on that, how we deal with the foreign, the donors and the foreign, say the creditors, and how we are going to deal with them within these couple of months.
And
so if you can...
And Professor, political instability, how do you think that impacts on the economy? Because we have, we know that one of the matters that are being considered now in political sort of corners is this move to try and have a referendum and extend the term of the parliament rather than an election, a la J.R. Wardner style, But what do you think? How does political uncertainty affect the economy?
So, of course, there are, these two are connected. Now, even 2019 and the 20, what we experienced in the country is initially we started with economic issues and finally that ended up with a political crisis. So, even now, what we have seen that, the political instability is a big, the problem for the government to run forward, I can take the country economy forward. Because now when you look at the IMF agreement, so there's a very important aspect of that is, we have to get past this STAR Act, Stolen Asset Recovery Act. For that, the government needs to get the support of all these the people who are in the government side. Okay.
Yeah.
So so that would be very crucial. That would be very crucial. And at the same time, we can see that again the political concerns are controlling the economy. So I'm sure that personally I believe the best thing is rather going for any other way of keeping their power. So going for an election and go for a strong government would be very much important to the president, especially to implement this IMF agreement or whatever the policies that they are going to implement. Because otherwise, they'll be taking more time to get one act passed and finally come to the final outcome of the economy. So even the IMF, I don't think they are happy with the current situation.
We've got a few minutes left, Professor. What should be the dollar earning strategy of the government of the day?
Yeah, so when it comes to the dollar earnings, basically we look for the four aspects. One is that exports, another one is the tourism, and foreign direct investment, and the remittances. And when you take the exports, we get approximately $1 billion per month. But just compare, just think of from 1977, maybe in 1989, we started this garment exports. Other than that, do we have any other way of taking dollars to the country, earning dollars to the country? No, any other country. So we have to think of how we can expand our export market. Even the IMF financial plan very clearly indicated that currently we have around $13 billion per annum in terms of exports. So we have to take it up to $16.5 billion. So there should be a proper way. For that, we have to facilitate all these exporters. Now currently, if you look at the last 2 months, the exports they reduce the income. So it's very dangerous now. And the foreign remittances. The foreign remittances also we highly depends on these Middle East innocent ladies. So we can't say that we are getting foreign remittances from that aspect.
Yeah.
So we have to look at the good market for the skilled employed and attract more investors, that is foreign direct investment, and facilitate the tourism. The tourism would be the best option to the country to look at new dollar sources.
Thank you very much, Professor Perera, for joining us this evening. And that's the way it was on Newsline Zoom this evening with Professor Aminda Perera from the YMB University out there in Kulia. It's now time for the primetime news. And not before, of course, I say to you, have a great evening as much as you can. And God bless you all. Thank you.